And while the Gulf sovereign wealth funds built over decades from oil riches may now face their biggest test yet, as tensions rise in West Asia and energy infrastructure faces disruption risk, governments across the Gulf could increasingly rely on these massive investment pools, originally designed as financial buffers for difficult times. Now, the Gulf countries collectively control sovereign wealth funds, worth trillions of dollars, created from decades of oil and gas revenues and invested globally across technology, infrastructure, real estate, and financial markets. Now, major funds include Saudi Arabia's Public Investment Fund, Abu Dhabi's Mubadala and ADIA, Qatar Investment Authority, and the Kuwait Investment Authority, many of which rank among the largest investors globally. And these funds were designed as rainy day reserves to stabilize national economies during crises such as oil price collapses, wars, or economic downturns. But rising geopolitical tensions in the region, including attacks affecting energy infrastructure and shipping routes, could put pressure on the Gulf economies and potentially require governments to tap these reserves. And despite efforts to diversify their economies, Gulf states still rely heavily on oil and gas revenues to fund government spending and development programs. For example, Saudi Arabia's Public Investment Fund has deployed tens of billions of dollars globally, investing in technology, infrastructure, entertainment, and large development projects tied to the kingdom's Vision 2030 plan. But if instability persists, analysts say some investments could slow as governments prioritize domestic stability, liquidity, and fiscal support. Now, historically, sovereign funds have served as financial lifelines during these crises. During the 1990 Iraqi invasion of Kuwait, the country relied heavily on assets from sovereign wealth fund to sustain the government in exile and rebuild the economy afterwards. However, modern sovereign funds hold a large share of assets in long-term or liquid investments, meaning selling them quickly could be difficult without affecting markets. Experts say Gulf funds are unlikely to rush into large sell-offs. Instead, governments may rebalance portfolios, slow new international deals, or increase borrowing while preserving long-term investment strategies. But if regional tensions deepen, the vast sovereign wealth built during decades of oil prosperity can finally be called upon for exactly what it was designed for. That is, a financial shield in turbulent times.